So basically, you now look at the capital allowance that you brought forward from previous calculation. Capital allowance for the year 527,500. I show you this 527,500. This is it here in my previous schedule. 527,500. Now this is the capital allowance restricted to two-thirds of accessible profit. So there's a restriction. So you calculate two-thirds from this Excel. Two-thirds of this figure, two-thirds of this figure is about 1 million. So you cannot claim more than 1 million. Even though the total capital allowance here is 2.3 million, about 2.349769 million, you cannot claim everything. This company is not a manufacturing company, it's a service company. If you're a manufacturing company or agri company, you can claim everything here. But now you cannot claim everything. So basically, you now notice that two-thirds of this particular figure will give you this. You can only claim 1,024,925. So then this other one, you carry it forward. Okay, so you carry it forward. Then we also have, so you now have your total taxable income now. That's this particular accessible profit minus your capital allowance you are claiming. That's 512,464. You apply your CIT to it. Now, uh, let's look at the turnover of this company now. Let's see if it will be different. Like in CIT, okay, the small company. So I'm not looking at this 2018 anyway. So basically, if you are looking at a small company based on Finance Act of 2019, CIT will be zero because it's a small company. But now, in those days, CIT is 30% of this figure, and educational tax is 2% of this particular accessible profit. Total tax payable is this. And if you have withholding tax, you can use it to offset it. Okay, so but the tax liability is total 184,487, which is 153,739 company's income tax and 30,748 education tax. So that's the two tax I have to pay. And if you have withholding tax or credit notes, you can use it to pay off this tax. Most companies in the service sector they do have, but they may not know. But you need to find out. Okay, so that's it. As I said, tax calculation is dynamic, but of course, the essence of this lecture is also some of us are practicing already. Also put you through and put you in proper perspective to be sure of what you are doing. Okay, and I will quickly show you the capital allowance schedule. This is the capital allowance schedule. I've already explained the schedule in my PowerPoint presentation. Initial allowance, annual allowance rates. You can always use this uh, when you are doing your capital allowance computation. Okay, so I want to thank you for listening to this session. And don't forget in your handbook, you will see some computation there. You can always read them and get more scenarios to practice with. The more scenarios you practice with, the more confidence you will have to defend your client when it comes to uh, tax clearance certificates and any tax related issue. Okay, so thank you for listening. I would like to have your question and your comments. Okay, Mrs. Adebola Odeyemi, you joined this. You joined it quite late. Any question or comments? Yeah, Madam Adebola. Oh,
Yes, sir. I didn't join late, so I started about 3:10 or thereabouts.
okay, that's good. So, were you there? Were you around when I was doing my PowerPoint presentation,
Yes,
or you joined with the Excel?
yes. I was there when you were doing the PowerPoint, when you were talking about capital allowance.
Okay, okay, you're welcome. So, any question
Thank
or
you.
comments?
Yes, Mr. Obi. Yes, please. My question is against the backdrop of
Please, a minute.
numerous
Let me put
Chinese
my earpiece so I can hear you better.
companies.
Okay. Hello.
Yes,
Yeah, your
yes.
question. Your question,
Yeah,
ma'am.
I said my question is against the backdrop of numerous Chinese companies springing up in the country.
Okay.
I want to ask for investment allowance of 10% for Chinese companies that are not registered in Nigeria, but they have significant presence in Nigeria and they earn income in Nigeria. Such companies, if they have invested a lot in investment, I mean in assets, are they going to also enjoy investment allowance of 10%?
Okay. So are they registered in Nigeria or they are not registered in
No, no, no,
Nigeria?
they are not registered, but they have significant presence in Nigeria and they earn income. In fact, they earn so much income in Nigeria.
Okay, okay. They are non-resident. They earn. I mean, so much income in Nigeria. So not
Yes.
that they are okay. So they have a permanent established a PE in Nigeria. They
Oh,
have
sure,
a
sure.
significant. So for their normally when it comes to their CIT, based on the income that
Yes.
they earn in Nigeria, accruing in Nigeria, they will file their tax returns normally. So they are going to claim all the invest. They are entitled to claim the investment allowance, the annual allowance, and all the allowances.
And the initial,
Yes, yes,
even though they are not registered in Nigeria.
yeah. There's a tax based on the what we have before now. They were their tax was based on deemed profits, but there's a new circular.
Okay.
Yeah, it was based on their deemed profits. There, estimated profit. The tax authority will look at their deemed profit and apply the tax rate on their deemed profit. Okay, minimum of 20% of their turnover will be captured and 30% will be applied to 20% of their turnover. And that's what they pay as tax before now. But the even the Finance Act and FIR circular requires that such companies should file the based on the income they earn in Nigeria. They should file their income based on the operation in Nigeria in line with normal guideline for filing return. So they will do their CIT computation. The only thing they will not do, they are not claiming is just only education tax, but they will do
Oh,
their
they are not paying it. Yeah, of course, because they are not registered in Nigeria. Yes.
yes exactly. So they will calculate their CIT normally the way every other company computes, but it will it will be based on the income they derive from Nigeria.
Okay. Now,
Yes,
sorry, there's another question. It is because I'm bringing up the issue of the Chinese company that I remember this now.
yes.
It doesn't have anything to do with CIT.
Okay,
There is a Chinese company that I was opportune to sit down in their tax meeting. Now they are into loan. They give market women small loans. They are more like a mini bank, a loan company, so to say.
okay,
Now they have this tax auditor that told them, ordinarily when customers are paying back loans, they get um they get withholding tax on interest.
okay,
Now the withholding tax on interest, because all these market women, they don't really pay tax, and so there is no income for them to actually deduct the withholding tax that they have deducted by the company. Are you on? Do you get my
Yes, yes,
question?
I get your question.
So
Yes.
their tax auditor now advised them that such withholding tax, because it cannot be paid back to the loan recipient, that they can actually use it in their own CIT to reduce the amount of CIT payable by the company.
Yeah. No, that's not
Is
proper.
is it possible?
No, no, because the withholding tax deducted is deducted on the, like the interest on, it's like a, like you say, it's like a microfinance bank in a
Yeah,
way.
yeah, it's like a microfinance. It's a loan company. They give to all these market women.
Aha. So meaning that like the interest on that loan now,
Yes,
that
sir.
the customer, the person that collected loan, the interest they are paying on that loan, withholding tax is being charged on that interest.
Yes, yes,
They charge withholding tax on it, and that
on
withholding
the
tax,
interest.
yes, they look at when it comes to withholding tax. Now the question is that who is paying the interest? Who is supposed to charge withholding tax? Okay, normally it's the customer, that person that obtained the loan.
Yes,
Okay, the customer that obtained the loan that should deduct withholding tax, because the customer is paying them interest on that particular loan that
yes.
they collected. So it's the cost if